All right, all right. I haven't done one of these free streams in a while. I think it might be a good time to take a revisit. Um, I'm going to revisit this screen. Let's see. We got anybody? No, we don't have anybody yet so far. Let me just check. Uh-huh. Okay, right. Okay. I am live. Okay, good. So what I want to do, I want to. It's been a while since I've done one of these free streams, but I want to. I've done a lot more work on the power law, and I want to show you a bunch of stuff, and I also want to show you some new stuff on this book that's coming out, which I think is really going to be a very interesting book. For a lot of people. Hey, Jordan. All right, so let's start with this book, and I want to show you kind of this book that we're talking about here. Let's go to this, and I'm going to go this way. Perfect. All right, so this book is a new book that it's almost finished. Unlike the first book, it's going to be very much a kind of mass market book. It's meant to be a $20 book. Just buy it in any airport. And the title of this book is Bitcoin 1 Million, the Final Chapter of Fiat. And it really is, the first book that we wrote was sort of the history of Bitcoin, which is, the motivations behind Bitcoin, the fundamental ideas of the white paper, the first couple cycles, really all the cycles leading up to the ETF. Really, that was sort of looking back. It's been a lot of archaeology that Ben and I have done over the book, and we wanted to build some kind of a coffee table book, which is really not meant for a huge audience, but just meant for a small audience. It was very successful. Financially, it was very successful. It was, we sold $500,000 worth of books, which, if you told me that we're going to sell $500,000 of a coffee table book, I would say that's insane. But we did. We have a few left, and you can buy it. It's really, I look at it as kind of a art piece. It really became an art piece because of Lee Steffen, our art director, who built it into something absolutely amazing. This is a completely different book. This is a book that looked forward into the next 20 years and really articulates why I think Bitcoin's getting to 1 million, how fast it's getting to 1 million, what is sort of the mathematical quantitative arguments for it to get to 1 million, and then beyond, and beyond 1 million. We're not saying it stops at 1 million. We have a chapter about Bitcoin 10 million. But it's really a different kind of book, and it's different from any other Bitcoin book that was ever invented. So, in my view, there really are two great Bitcoin books, in my opinion. There's so many of them, but there's really two that stand out. One is the Bitcoin Standard, which sort of articulated this idea that we're moving away potentially from a fiat standard to a Bitcoin standard, and talks a little bit about some of the economic arguments of that by Saifedean. And the other one is Lynn Alden's book, Broken Money. So, both of them are sort of a little bit more on the economic side, not very quantitative, either one of them, and not really kind of postulating exactly how we get there. So I'm going to use a lot of different arguments in this book. I'm a mathematician, I think numerically. And in this talk, I'm going to show you a little bit about kind of the way we've articulated this argument for Bitcoin 1 million, what this book's about, and why I think you're going to enjoy reading it. So let's just dive into the book itself. Let's dive into the book. Okay. All right, let me make sure that you can see it. Okay, we got some acknowledgements. Let me just make sure we can see. Okay, great. So this is sort of the way we've broken this up, and it's organized into 21 chapters. The of course. So the basic premise of the book, we start with the power law, which I think is incredibly important. We're going to dive into it more here. And then we're basically going to say statistically, if you look at Bitcoin price statistically, without making any assumptions, just a statistical analysis of Bitcoin's price, you get to the fact that it follows a power law. You get that is undeniably, that's the only model that it follows. And we are going to make some very important observations there on why it follows a power law, how this thing looks like it's evolving over its 16-year history, the power law versus a lot of things, not just fiat, but the power law versus gold, versus the S&P, versus money supply. We're going to talk about the power law as it applies to the adoption of Bitcoin with different address fields. We're going to talk about, so it's really all aspects of the statistical growth of Bitcoin over time. And we're going to make this observation that really there's no reason to think that Bitcoin is not going to continue along this statistical path that is incredibly strong statistically. It's unlike anything I've ever seen in my life, as a quantitative guy who's studied statistics, has a PhD in this area, who has studied this stuff, has applied this stuff quantitatively throughout my life. And I've never seen anything quite like this. So, the power laws is the first premise, the building block of the argument of Bitcoin 1 million. The second is going to be the money printer, right? Where we're going to study exactly how much money is being created, how much is created by central banks, and really how much is created by the banking system on top of central bank money, right? And we're going to be inspired a lot by the work of Matthew Mazinskis on this. If you're coming to our conference in Bitcoin Alpha, you'll meet Matthew Mazinskis. You'll also meet Giovanni Santostini, who was the first person to actually discover the power law. And I think these two are kind of the foundations of the argument of why we have such confidence in Bitcoin. And I liken it to a crime scene, right? So you have a crime that was committed, and you have to understand there's three things: the means, the motive, and the opportunity, right? The means. Why is Bitcoin going up? We have the ETF. So now we have the institutional money of this world has a place to easily participate in Bitcoin. Without the ETF, you do not have the means of mass Bitcoin adoption. It may evolve through a different way, it might, but that is right now the means of this next phase that we're in. We have the motive. Why would people adopt Bitcoin? And the reason is that money supply is growing at a 7% rate, very, very predictably. Nothing stops this train as far as money supply. And so we have a melting ice cube. Anything that you keep in fiat, whether it's the dollar, the euro, even now the Japanese yen, which is now inflationary, or the yuan, we are in a melting ice cube situation. So there's a motive, to create, and then the opportunity. The opportunity is the sheer size of the fiat markets, right? So, we'll talk about $1 quadrillion worth of paper that we're likely to see in the next 2 decades. And so we're going to make the argument that there's so much paper that it's almost inevitable that we get order of magnitude 10 trillion at a bare minimum that goes into Bitcoin. And that will push Bitcoin over 2 decades close to the $10 million mark. and very high certainty, Bitcoin will hit $1 million a coin within a decade. And I think we can even be more precise than that. And I'll show you an app that we've developed that'll help you kind of keep track of that. Then I talk about inflation. We talk about, this money printer, the 7% kind of, denominator, if you will, that's being applied to all things. And we're going to talk about how realistically that's played out, so far in terms of inflation. There's a lot of bad information about inflation, and we'll dig in there. And then we're going to talk about how all this stuff works for the 4 major asset classes that we know, right? And there's 4. There's stocks, bonds, real estate, and gold. So we're going to talk about each one of these asset classes from the point of view of a Bitcoiner. And we're asked the following question. First of all, how has that asset class performed versus Bitcoin over the last 1 year, 5 year, 10 years, etc.? How are they expected to perform? And how much of the asset class's performance has really just been due to the money printer? So we're going to take a complete new look at asset allocation, with really the idea of challenging the orthodoxy that you should be 60% stocks, 40% bonds. So we're going to challenge that. Then we're going to get into the ETF, the history of the ETF, why the ETF is so important. We're going to talk about Bitcoin treasury companies, how they're less important than the ETF, but they're nevertheless, they've definitely played a role. We're going to talk about a whole chapter on bit bonds, even though they don't exist yet. It's just a proposal. But I view that this could be very significant. And I think it's worthwhile spending a chapter on the impact of bonds with a Bitcoin kicker. Potentially they'll be issued by the government. Potentially they'll be issued by private companies. But I think this is very important as far as looking forward. They're going to play a role. We're going to talk about stable coins and how stable coins are going to change things as far as the actual adoption of cryptocurrency wallets. And I do mean cryptocurrency, right? Because we are going to very likely have, trillions of dollars of stable coins in the not too distant future, up from, say, 300 billion today. And this is going to be, we think, the gateway drug for Bitcoin. It's another way that mass market can buy Bitcoin and get on board in a custodial or non-custodial way, right? We're talking a little bit about fast Bitcoin. So once you get a stable coin, maybe you find different ways of actually sending that Bitcoin between people. So there's Lightning, there's Wrap Bitcoin, there's other new things that are on the horizon. Arc comes to mind. And then we're going to talk about why, despite stable coins and other coins that are coming, really there is no second best. And from an investment point of view, all we have to do is focus on Bitcoin. Then we're going to talk a little bit about the disruptors to the thesis. How does AI play into this? What's the relationship between AI and Bitcoin? How does AI and intelligent bots and how does that work? How does AI impact the way that investment managers are going to be potentially looking at Bitcoin? We are going to talk about the quantum risk. We're going to dive deep into the quantum risk. We've done an enormous amount of work there. Then we're going to talk about really the final boss, which is governments. This is the ultimate risk. Can we get a ban on Bitcoin? Could we get limitations? Could we get an unrealized cap gains tax on Bitcoin? Then we're going to talk about how we as Bitcoiners get to 1 million. And there's 3 areas here we're going to talk about. One is psychologically, what are some of the psychological traps and methods of hodling? How do we deal with an asset that is this volatile, right? We're going to talk about the Kelly criterion, which is the mathematical best way of allocating between risky assets, including Bitcoin. and the Kelly criterion. We're going to derive the preferred Kelly allocation to Bitcoin, which is north of 70%. We're talking about Bitcoin-backed loans. We think this is a very important area. People taking loans to, it could be loans to buy more Bitcoin. It could also be just loans to live, right? So how do you live without selling your Bitcoin? We're going to sum it up into why our thesis of why we believe Bitcoin will hit 1 million by 2035 and why we think it will hit 10 million by 2045, although with less conviction, right? So we are hardcore convinced that Bitcoin will hit 1 million by 2035. 2045 is kind of a optimistic number for 10 million. We do think we probably will hit it, but it's it's a little bit of a stretch. And we talk a little bit about some other sources. So I just want to go over some of the chapters on the power law, give you a sense here. Just some of the graphs we've reproduced. This is the basic power law graph that we have. The best way to look at this is to look at the data here, the dates, as actual time, and have them shrink as the log of time increases, right? So the data is log, but we're using actual dates here. And here you can see the price is increasing as a power of 10. So 100, 1,000, 10,000, 100,000, even increments, right? So we're spending a lot of time on these charts, trying to make these charts really nice. Some of these charts haven't been quite as massaged yet, but you'll get an idea. We'll talk about how the CAGR of Bitcoin will change. And this is very much a function of the mathematical nature of a power law, is that the CAGR decreases very predictably over time. At the beginning of 2025, the CAGR was 40%. We're actually now below 40% CAGR. So we're already at 39% CAGR. This will get down to 23%, and it will be in the teens in 20 years. So we are going to go to a 16% CAGR by 2045, illustrating that really this next 10 years is where the gold rush happens, to quote Saylor. So I think this is very important. We're going to talk about why this is, and really the address growth is the main thing. This is a remarkable graph that I made showing the addresses with with more than 1 million sats, and it's a very, very tight fit with actually an R squared of 98%. Okay, and it doesn't really depend on good markets, bad markets, doesn't matter. Adoption for Bitcoin is very constant. Right now, we're a little bit below trend in terms of our adoption, but we go beyond that. We're going to talk about in the gold chapter about the power law versus gold. This is one of my favorite graphs. This is a graph of the log of moving averages. So we take a log, moving average of logs. So we take the log of Bitcoin price and we average out over the last 48 months, okay? So this data here has nothing to do with this data here, nothing. There are no data. And yet you will see they line up perfectly on this log, this trend line, with an R squared of 99.7. Now, if this graph does not convince you that the power law is true, I don't know what to tell you. I think you probably need to go back to your statistics course, because this graph to me is one of the most important graphs really in the history of finance. I think it's just absolutely remarkable graph. I shared this graph to Balaji, who just couldn't believe it initially. And he was like, "Can I replicate it?" And I go, "Sure, easy to do." So all this stuff, we have a site, and we'll show you kind of how we're open sourcing all this. So you want to look at any of this, you want to check it out yourself, you can, right? So we're kind of going through the power law here, and this thing is the power law of hash rate versus time. Also a great fit, 96%. Actually a little bit better than the actual fit of the power law, which is now 95%. So hash rate, is around an 11.22 power, right? We are getting a 5.6 power, right? This is almost exactly double the power of the power law. It's an amazing number, right? So the address is almost half. If you go to the addresses, this is almost half the power law. So we have this really tight, all this evidence of the power law. And, I don't really want to focus too much on the timing the market and stuff. We'll deal with that a little bit in the Kelly criteria and stuff. But that's sort of the power law. We're trying to keep the charts to a manageable number, so we don't overwhelm you with charts. One of the things is people can just get overwhelmed and they just tune it off. And I really want people to come away with this book with some clear, actionable numbers, right? So these are my kind of the destination. I really want you to focus on these numbers, right? And basically the way I look at the trend line, right, is you have a power market trend line. By 2030, the trend line gets you to 450. By 2035, 10 years from now, we'll get to 1.45 million, okay? But that's the trend line. How much do we get above the trend line? I'd argue we can get 3x above the trend line. And I'll argue that in more detail in a second, but that's my best number. Is 3x trend line is kind of your top. It might get a little bit higher, but I think that's a reasonable number for the top. So currently, we're about 100,000, 103 in trend line. So 310 would be the top if today was kind of if the market basically rallied and ended its rally, kind of next month. I'd say over 300 would be, bubble territory. Not sell everything, again, it's more like potentially take profits on some of it, trim positions. But again, looking at this in a very broad stroke, we think we could get to about $30 trillion by 2035 in terms of market cap, and about $180 trillion by 2045. Now, it seems like a lot, right? It seems like a lot, but we'll show actually $180 trillion in 2045 is, we're still only 20% of the total M3 plus bonds market, which is over a quadrillion. It's actually maybe about 16%. So, that's a very important thing. So I'm going to just kind of skim through this book to show you more. Then we spend a lot of time on the money printer. Okay, so why do I think this is so important? The reason is, as I said, we have the means, the motive, and the opportunity, right? And the opportunity here is all this fiat that is being printed like crazy. And it's very important to get a sense of how much is being printed, how much of that is central banks, and how much of that, and what do we think the chance of that not happening is, okay? And, I'm using a lot of the work of Matthew Mazinskis for this. Again, I think he's doing a great job. This is a little graph. We'll probably redo this, but it sort of shows the multiplication of base money to M3, right? So there's a global money pyramid, which is now $150 trillion worldwide of pure money, right? That is money in bank accounts, banks' money that's held at the central banks, and fiscal cash, and checking accounts and savings accounts. 150 trillion of that, right? And so, this has been growing in the US at about a 6%. It grew a little faster under COVID. Now it's a little under. but it was very, very much a 6.5% number for a very long time. And I think that there's zero chance that this thing does not continue. China has a much faster money supply growth than the US. It is growing at about 10%. And part of that is the velocity of money in China is a lot higher than in the US for various reasons. But the blended number is 7%, right? So it gives you an idea there. So that's the money supply. And we talk about inflation, how much of this is real? What is the real inflation rate? We think the real inflation rate right now is on the order for goods and stuff, somewhere between 4 and 5% is what we think. And, and here's a really interesting chart, which is if you kind of look at real return, right? Which is after inflation, gold has not kept up with inflation. Bonds have certainly not kept up with inflation. Cash is getting decimated. The S&P has beaten inflation, but Bitcoin, of course, has massively beat inflation, right? So, and we're using the kind of money printer inflation here. So, up until now, it has been true that buying stocks has been probably your best bet against inflation, but that has only been true up until the invention of Bitcoin, right? So I'm just going to walk through this book so you can kind of see. So we talk about the stock market, and how, this is the stock market where I'm looking at the stocks divided by M2. And you can see that really, a lot of the stock market is in fact due to M2, money supply growth. That's it. That's something that is quite remarkable. Everybody's doing indexing. This is the growth of Vanguard, which has basically grown, since 2007 has grown to a $10 trillion behemoth. We talk about the ETFs and how they're so important to the way all this stuff breaks down. And then here's the kind of the breakdown, really, which is the real return is really all in Bitcoin, not in stocks, and not in NASDAQ either. So again, here's Chinese stocks, versus the money printer. And, why have, what we discussed in here, why have US stocks been a better investment than Chinese stocks over time, or European stocks, or Japanese stocks for that matter? But it's all in here. And we talk about, how stocks like MSTR are kind of changing the game a little bit, and talk about whether you should even have any stocks. And the answer is we think you should have some, but it should be nowhere as much as 60% of your portfolio. We talk about bonds, an area I spent a lot of my professional career in, and talk about the growth of the bond market. We talk about who owns bonds, because it's a very mysterious thing. Retail is only 15% of retail investors who own bonds. It's a lot of institutional. It's a lot of pension funds, insurance companies, banks, and sovereign nations. So really talk a lot about the bond market and how it's going to play into the next 10 years, and why it really is kind of the opportunity for Bitcoin. It's really the bond market. So we're going to go over that. Talk about real estate, and why we think real estate actually is going to be a pretty bad investment over the next 20 years, especially relative to Bitcoin. And make a lot of other arguments here. I think this is it's a pretty interesting section, actually. Should you own real estate? Everybody always asks me that. I'm young. Should I buy real estate? Should I not? Should I rent? What should I do? Talk about gold, right? So I used to be a big gold bug. I own gold, physical gold. This is a power graph of Bitcoin versus gold. And I'll show you some other stuff that we're working on, and why I think that gold, even though it's outperforming this year, long term it's not a great asset. So we go over different aspects of gold, generational aspects. A lot of older people like gold. Younger people do not like gold. And Bitcoin versus gold, should you own gold, etc. And we talk about the ETF. I'm going to go a little faster here. We talk about the growth of the ETF. We talk about, the inflows and how much would really be need. What kind of inflows do we need to get to Bitcoin 1 million? And the answer is $1 trillion. We need $1 trillion of inflows into ETFs and into things like MicroStrategy. The good news is we're going to get $1 trillion of inflows. We had 100 billion since the ETF was launched on January 11th, 2024. We do some projections of annual inflows on the on the ETF, and we do our best to explain what we think is going to happen with the ETF. We talk about Bitcoin treasury companies. We talk about this yield strategy, how miraculously MSTR was able to create 70% Bitcoin yield in 2024, but how that's not going to happen anymore, unfortunately. It's just not likely. We talk about how big their opportunity could still be. We talk about the other Bitcoin treasury companies where we see them. And we talk about sort of in general how we see corporate Bitcoin treasury adoption, in traditional companies. This will happen, not immediately. We talk about bit bonds a lot. There used to be these gold-backed bonds, these Giscard bonds, and one of my close friends was a trader of Giscard bonds. We talk about them. They almost bankrupted France, and it's worthwhile to talk about it. We talk about TIPS, which were launched in 1997, which are actually pretty successful, and provide a little bit of a backdrop for how bit bonds might work. I talk a lot about my Salomon Brothers years, a lot of personal stuff here. Okay, and then we talk about stable coins a lot, how stable coins are growing, what this means for Bitcoin, the different different paths to Bitcoin. How does somebody start with stable coins, go into Bitcoin? How does this impact corporates holding stable coins? What kind of network effects we're dealing with? DeFi, tokenization potential, right? You've heard a lot about tokenization. Fast Bitcoin, if Bitcoin is going to be used at all as a means of exchange, even among corporates, we need faster Bitcoin. We talk about Lightning. We talk about a lot of stuff that we've been involved in on Wrap Bitcoin side. Just basically the path forward for faster Bitcoin. We talk about in general why we don't think you need to, from an investment standpoint, buy anything else other than Bitcoin in the cryptocurrency realm. In particular, we're not fans of Ethereum, so we go over that. We talk about AI and Bitcoin. We've done some deep thinking there, like how we think this will impact Bitcoin. We think it'll be positive for Bitcoin, potentially not the main thing, but we think it'll be positive for Bitcoin. And there's a lot of stuff there. I'm just going to kind of wade through it. Talk about quantum quite a bit. We've used quantum computers now, so we understand what's involved. And we're going to talk about the real risk over the next 10 years for quantum, which is not zero. how we can get a quantum resilient Bitcoin, what type of Bitcoin addresses are going to be vulnerable, what other attack vectors are there. If you're into Bitcoin, if you have Bitcoin, this might be of use to you to understand this stuff. We have the whole how our government's going to play into this. What are they likely to do to stop the growth of Bitcoin? In general, how do we hodl better? What are some of the better reasons for hodling, and how, for example, it's very easy to get psyched out of Bitcoin completely. In 2022, 63% of Morgan Stanley interns were on Bitcoin. 4 years later, only 12% own Bitcoin. So, it's developing conviction, staying there, getting your pain psychology out, avoiding trading, all these things, that's that. Kelly criterion. This is where I'm going to bore you with a lot of math, unfortunately. And it's just, I also wanted to put a lot of math. By the way, this is all typeset in tech. So we use LaTeX. The white paper uses LaTeX. I use LaTeX. I knew Donald Knuth, from Stanford days. Donald Knuth was the developer of LaTeX. And one of the great things about LaTeX is you can get these beautiful equations, right? So I love the fact that I was able to typeset all my favorite equations with LaTeX. I sort of show you how you build out Kelly, how you prove all the Kelly stuff. And even for the serious mathematically inclined, I give you, proofs of the Kelly criteria. So it's actually my favorite proof. It's very, very short, right? Just maximize this growth rate. And that's it. You take a derivative, set it to 0, solve for the fraction, you're done. Okay. Talk about Bitcoin-backed loans. Ben and I are building, we think is going to be the definitive platform for Bitcoin-backed loans. It's called Libre. It's a two-way marketplace. There's no custodian. It's all sharded. So we talk about that, but also other things. Aave, which is on Ethereum, works great on wrapped Bitcoin, but not a term solution. It doesn't keep your Bitcoin in actual Bitcoin. It's all wrapped, and there's some drawbacks to that. One of which is tax, but other thing is wrapped Bitcoin is not Bitcoin. And then we talk about Bitcoin 1 million by 2035. Why we think we're going to get there with the power law. What does it look like? What does the world look like at Bitcoin 1 million? And then Bitcoin 10 million, which is what everybody's really interested in. How do we get to 10 million per coin? And, what does the monetary asset income look like at 10 million per coin? So that's that. So as you can see, this book's been written. We're just kind of doing the final cleanup of the book. For final cleanup of the book, I'm really excited about this book. I got to tell you, it's going to be amazing. And really, I've learned so much thanks to you at all the people that follow me, all the spaces that I've done, all the people I've gotten to know, the Giovannis, the Stephen Perrinots, Plan C, Sina on the power law side, and Matthew Mazinskis on the power law side. And then people on the economic side, Matthew Mazinskis, again, comes to mind, Lynn Alton, and others, right? So I wanted to put all this together there's a lot of material here. It's very new. It's a lot of really new material. I just wanted to have it in one place. And I wanted to have it in a format which is, the ZBTC on Solana. Well, yeah, Okay, so I'm going to answer that one. So ZBTC. So I'm friends now with Justin from Zeus Bitcoin. He will also be coming to our conference, and I asked him to lead a session called "Bitcoin on Solana: Blasphemy or Game Changer," and he will or Breakthrough or Blasphemy, I think was the title of the talk. And so he's gonna present, and he will have a little booth so you can look at ZBTC, which I think I'm a fan of ZBTC. I think it's great. Now, the word wrapped Bitcoin is sort of a portmanteau placeholder, right? By that I mean any kind of Bitcoin that is not native Bitcoin, right? It is, you're right, it is not wrapped Bitcoin per se, in that um, you know, it has the capability of being unwrapped on demand, right? And that to me is a big game changer. So BitGo will not take your wrapped Bitcoin and you can't send it to them and get unwrapped Bitcoin. You have to buy it from a wrapping um, provider. And the fees can be high, right? So going from Bitcoin to wrap Bitcoin and back can cost you 1% or more, right? It could cost you more than 1%. So, even if you're achieving a yield on your Bitcoin, for example, there are costs, right, to doing that. And so, but what Justin is doing with his sharding on and validators on it's not a multi-sig, it's an MPC. It's a multi-part computation. It's very similar to what Ben Sigmund's doing on Libre with sharding and MPC parts, right? However, they're not competing in any way. Libre is really just a lending play. It is entirely focused on lending. So it actually keeps the Bitcoin intact in native form and only uses the MPC stuff if you have to do a liquidation, right? Whereas ZBTC is really more of a portal to have the Bitcoin be turned into a DeFi asset, similar to WBTC on Ethereum. And I'm very bullish on Solana, as I've also said. I'm a Solana bag holder. I like Solana. And I like it over ETH, right, for what it is. I don't like it long-term versus Bitcoin, because I think Bitcoin has, well, let me put it this way. I think Bitcoin has a much bigger opportunity than Solana. Solana's opportunity, is in the trillions of dollars. Bitcoin's opportunity is in the hundreds of trillions of dollars. Having said that, Solana could be a very good investment from here. Who knows? It could get wiped out by something else, maybe even Ethereum. Tom Lee's not been wrong generally, so I'm not going to totally fade Tom Lee. Yeah, so that's that about Solana. I want to show you a few other things now. I'm going to show you this site. This site's all of the site is it's very new. Okay, so this site, let me put my little face in here. Oh no, that's not good. Maybe do it like this. Okay, so this site's called b1m.io. You can also get to it by typing 1million.quest. It'll link there. Okay. What we wanted to do here is give you a power law dashboard, sort of similar to the strategy dashboard, but only for Bitcoin, right? So we're not talking about MSTR here. We're not talking about Bitcoin treasury companies, but we want to give you the power law facts without cluttering it up with tons of graphs. Now we do have the graphs available, but I'm going to show you this. I'm going to show you this this site. So The first thing you see here is we have the Bitcoin price. This is pulled in real time, so it's 109.1 right now. We have the model price from the power law, which is 102.5. And so right now we're trading at a multiplier of the Bitcoin price, right? So we're trading at 6% over the trend line. I think this is a very important number, the 6%. This is the power law slope information. So right now the slope is 5.62. The R squared is 95%, almost 96%. The log vol, I'm going to redo this thing. I would say over the last 48 months, the log vol is actually 0.2. And I'll get into that, what that means in a bit. Over the history of Bitcoin, it's more like 0.3, but the log vol over the last 48 months is 0.2. And the CAGR of Bitcoin, this is not the historical CAGR, right? But this is the CAGR that's implied by the power law trend, is 38.8%. So, at the beginning of 2025, this number was 40%. And we're already drifting down to 38%. This number is going to get lower and lower and lower with time. We showed that graph in the book. So, the golden years of 40% plus CAGRs are over, at least on the trend, right? Now, we can project out where we will be in various periods. So end of year, the trend line says we're getting to 114. By the end of 2030, however, we're going to be all the way up to almost 500,000. By 2035, the trend line is 1.5 million. And by December 2045, the trend line is going to be 9 million. So, again, we're saying 10 million by 2045 is a little bit of a stretch, right? But, and we'll go into this thing, 1 million we should get by 2034 on trend line. But at 4 times trend line, I'm going to revise this to 3 times. We could get there as early as 2028. So I think the earliest we're going to get there is really somewhere towards the end of the decade, right? Maybe it's 2030. We might touch $1 million Bitcoin within 5 years. 10 million, it's a long way away, guys. The earliest we're going to get to 10 million looks like 2038. Not that long. I mean, it's 14 years from now, 13 years from now. Not terrible. Now, another thing is I wanted to show you stuff that you've never seen before, which is the same information relative to gold. And I'm having some issues with this one. Let me just refresh the, I have to Command Shift R. Okay, there we go. Okay, there we go. The gold price at 34.50, I just hard coded that right now, but because I need to get an API, a good API source that's not going to fail on me. The model says that we should be at 57.3. So we should almost be twice as much. So Bitcoin's underperforming gold right now. The multiplier is, we're in the dumps according to, relative to gold. That to me is bullish, right? And Larry Lepard says, gold smells something. I don't know if gold smells or not, but gold has definitely outperformed Bitcoin so far. Let's see by the end of the year. I think by the end of the year, Bitcoin will come back and we are going to get a number that's closer to 1 here, right? Instead of 0.55. I also have the same thing versus M2. So I take M2, currently 22.1 trillion. I took 2,200, get the units standardized, divide Bitcoin by that, you get 5,000 roughly. The model's about 5,000. So again, we have a power law versus M2, right? Which is, a lot of people are, oh yeah, but the flaw in Bitcoin, the power law is that Bitcoin, the dollar is going to debase. That's not true. This power law proves that's not true. This is the cleanest way to do it, even more clean than gold, which has some other issues. The R square is a little lower. We're down to 94.8. The slope's a little lower. we're at 5.14, which makes sense because, you know, the M2 is growing at 6.5%. So you'd expect the slope to be lower, right? And, you know, we continue the same analysis here. I also did the same analysis versus the S&P 500. You know, we're also a little lower on Bitcoin relative to the S&P 500 than we should be, right? So in my opinion, bullish. I think, you know, we could go up 30, 40% and we'd be kind of normal versus what the power law says the S&P should be at, right? The Bitcoin relative to the S&P. And then I also put here for everybody's enjoyment, you know, the historical track record of Bitcoin versus gold. Bitcoin winning in all of the last 8 of the last 10 years, with bonds winning in 2018, gold winning in 2022, and so far gold winning, right? 31.5% versus Bitcoin at 17%, you know. So yeah, so that's the is this a custom tool? Yeah, it's, I mean, we literally just built this tool one yesterday. So Ben and I both worked on this, and we both built this yesterday. Some people are asking, where's the data? We'll have feeds. You can download all the data. You can, you know, this is just a tool, and we're also building this into an app, right? So this will be an app that that you can you know, download on the App Store and just quickly see. You know, you want to orange pill your friends, you know, just go, hey, check out the app. Boom, boom, boom. See how we've been doing. So it's very important, I think, to get all this data in the right place all together. And I'm hoping that the combination of this book, this website, will do it. We have a few other things on this website. This is again, you couldn't do this without AI this quickly. We have this curve here. This curve allows you to look at the power law, right? So here we are today. It says this is the price. If I come here and I go, oh, what about 2025? Well, we should be here, 114. Here's the curve in 2030. You know, and you can even go here and just sort of slide it over and sort of see what it should be at various point in time. So it's quite nifty the way they do this. You know, if you want to check out Libre, you can click here. You can go to Libre. We have the book preview. This is our cover of the book. There's a shark. We have a shark motto, and the shark is the apex predator. The orange shark is going to be eating all other assets, and we believe that. So, you know, this again is going to be a 300-page book. It's about a little over 300 pages, 330 pages, but very readable. You know, I think it'll be more readable than either the Bitcoin Standard and Broken Money, and actually have better data. I think it'll be a better book than either of those two, if I do say so myself. And then we also have data on Bitcoin Alpha, the conference that is coming up. So we have that. I just want to share one last thing on this thing, which I want to share is this sort of a post that I made recently. Let me get it. Okay. It's this. It really is the it's about the residual log volatility, right? So, you know, a lot of people are like, well, Fred, you know, this power law is going to break, blah, blah, blah. You know, we're going to go to 5 million in 2 years. We're not going to 5 million in 2 years. The power law is not breaking, in my opinion, very unlikely. And this is a really interesting graph, right? This is a graph which I put together today showing the trailing 48-month residual log volatility. So basically, you have a model, you have a power law model. Every day in this model, there's a predicted price and an actual price, right? So you take the difference between the prediction price and the actual price, and then you look at the the volatility of these residuals, right? How far are you oscillating around this line? Now, a number of 0.3 is an oscillation in log space of 0.3. What is 10 to the power of 0.3? It turns out that it's 2, right? 10 to the power of 0.3 is 2. What that means is that there's a 50% shot of going up over a year, 2x, and a 50% shot of going down 0.5x, right? So that's sort of your volatility. Now there's a kurtosis to this distribution, or a skew, excuse me, which means that actually there tends to be these bubbles that form that even go higher than that, right? So they go, instead of 1 vol on the upside, they can go 2 vol or even 3 vol, right? But if you look at what vol is, it's been going down. It's been trending down, and it's trending down closer to 0.2 now, right? So I've always been saying 0.3 is the vol number, but actually I think realistically you should sort of say 0.2 is the vol number now. You know, this is not a statistical relationship, which is pretty strong. You know, there's a 94% correlation factor on this analysis. And what it's telling you is that the power law is becoming stronger with time, not weaker. So everybody thinks, well, the power law is going to break. It's all about to break. No, it's actually getting stronger, right? And so what I think is kind of a bubble number now. Well, I would say it's 3 times trend line, right? 3 times trend line, which would be about 2.5 times 0.2. So you get to 0.5. 0.5 deviation would be 2.5 times. 10 to the power 0.5 is 2.5. 250%. So I think, you know, we're converging to this power law. And again, you know, you don't need, somebody said, well, you don't need the power law, Fred, you know, you don't need the power law. Yeah, you're right. You don't need anything, right? You don't need the power law. But the power law is sort of like, do you want to drive with GPS or do you not want to drive with GPS, right? If you want to drive with GPS, the GPS is called the power law, right? And it's also, you should also look at the money supply, because that's part of the GPS too. So you have 2 things. You have the power law and the power laws, right? Because there's versus fiat, versus M3, versus gold, right? All these things are kind of the same power law, but they're variants of the power law. And then you have money supply growth. Those are the 2 fundamental things that I think, you know, right now for the next 5 years are going to push this thing forward. And, you know, then you have all these kind of unknowns, right? Like quantum, right? Unknown, you know. Hunter Beast, who is one of the researchers with the Bitcoin Improvement Protocol on quantum, actually says today he thinks there's a 20% shot that quantum is going to happen before 2030 now. And he definitely feels like there's an elevated risk. And he's got new information from IBM Quantum Labs. So, you know, this stuff's happening. We are going to see it. Quantum will break Bitcoin. The question is, you know, hopefully we will have quantum resistant threshold signatures before then. I'm sure we will, but we can't be complacent with it. What's the web address? The app. Yeah, the app, you know, here's the best way to type the app. Bitcoin. Let me try doing it in the Bitcoin. That's right. that works. So it is. This is the best way to remember. Is this 1 million quest? Type that number in. Type that in. 1 million quest. You can also type, if you want a shortcut, but you have to remember how to do it. b1m.io. Both of those will get you there. And it's an app. It's free. We will also have an app, probably called 1 million or something like that. That you'll just be able to use on your app on your phone, or iPad. So that's that's that. I'm really excited about this book. I really feel like I've learned a lot since I came onto Twitter, and people have taught me a lot, and I've assimilated a lot. And I want to put it in one book so that we can all have it and talk about it in one place, and not be. It's very important to get the facts right? Like we got to get all the facts right. So like, what are the facts on quantum? Like, let's have it in print. Let all the stuff done on quantum. Let's get all the facts on money printing, inflation. Get all the facts. Let's talk about the gold versus Bitcoin debate. Let's have all that. So this is really sort of a different audience than just pure Bitcoiners. I think one of the audience that I'd really like to hit is TradFi financial advisors, right? So all these people making these financial, allocation decisions, they need something that is, that's readable, that is, that's not sort of a cult type thing, right? Like, if you start saying, keep everything in cold storage, blah, 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 they're just going to tune out. They're not going to be interested. For everybody in crypto, listen, I'm a Bitcoin maxi, but I own some Solana, right? I do. I've developed, a product on Solana just for fun, a prediction market on Solana. It's coming out that uses AI completely. Couldn't be done on any other platform other than Solana. So, so I'm not saying, everything else is bad. I do think Caspa is terrible. There's no redeeming quality of Caspa at all. I think SPX 9600, kind of a joke. I would never buy that. But I'm not going to be, part of my thesis, our thesis with Ben, is that stable coins are going to happen, right? They're going to be a big market on stable coins. Stable coins don't exist unless you have a blockchain that moves those stable coins. So kind of by definition, there's going to be a lot of rails that are going to happen. And those rails, they're going to either be Ethereum, Solana, potentially Sui, potentially Aptos. Mostly look like in that order, descending order of thing. I think my bet is that it will be Solana. Tom Lee is saying Ethereum. My gut feel is the user interface wins. So I think Solana has the best user interface. I've recently purchased a Solana phone, so I've got the new Solana phone, which is pretty cool. I have to say, I haven't really played around with it much, but here's my Solana phone. Has a vault and everything in the phone. You can hold Solana, access dApps, no app store. I'm a fan of the Solana ecosystem. At heart, I'm a Bitcoiner, right? So the amount of Solana I own is 1% of my net worth, maybe liquid net worth. Bitcoin is 80. So Um, but I feel like, we have to become, we have to have a thesis on how we see the world going forward. And I think if your thesis is there'll only be Bitcoin, I think you're actually not really, that's not a very credible thesis. And, that's one of the reasons why I've been supportive of Justin with Zeus Bitcoin. And, I'm probably the only maxi who's been supportive of him, because I think it'd be good to have good versions of Bitcoin on things like Solana. I think it will help Bitcoin. It'll be good for Bitcoin, and it'll be good for Solana too, right? Because those people can, maybe the first thing they learn is some meme coin or something, or some DeFi thing, or some stable coin, right? And then from there, they're like, wait a second. So I can store my thing in the hardest asset ever. And maybe they then go into ZBTC. And from there, they make the jump to, well, maybe I should actually own some actual BTC. So I'm a fan of ZBTC. I think it's going to be good. It's a tricky area because, if you look at REN BTC, which was under Sam Bankman-Fried, it was taken over by FTX. It basically went to zero, right? So, it's a very delicate thing. Bitcoin lending. We had this horrible thing with Celsius, BlockFi, Voyager. So you trend in this area. You got to go very, very carefully. Nobody wants to be the next Sam Bankman-Fried or Alex Celsius, So I feel like, yes, we're going to get there. Be very careful. Don't grow too quick. Make sure that, this is not about just first person fast deployment. This is move slow. Do not break things. Do not move fast and break things. So, but as I have a very long-term perspective. As a Bitcoiner, I would like to see Solana succeed. I think it could succeed in ways that help Bitcoin. So, but listen, I'm not going to be completely anti-ETH either. I think that a lot of things I don't like about ETH. I don't like the governance system of ETH. I don't like the user interface of ETH at all. I hate MetaMask. I think it's confusing. I don't like these layer twos. I don't like having to go in and out of layer one, layer two. It's not a good user experience for. Do I have an outline of key points on how a TradFi should position claims? Yeah. So the bull. Well, that's part of my book. This book is really that. Really, it's just sort of, And listen, I was, I came from TradFi, right? So my first bit of career was as a bond trader, right? So I was arbitrage bond trader at Solomon Brothers and at Greenwich Capital, and I traded billions of dollars of bonds. So and I've traded stocks, gold, TradFi stuff all my life. So you are my audience, right? So this is oriented at TradFi adopters, advisors, and just normal people who want to invest. How should they think about this asset that's so different, right, than any other asset? And I think that, if we take this thing, Bitcoin is so different that I think if you don't position it properly, you will just lose everybody. What about interoperability with Bitcoin? Okay, I disagree, Tyler. I don't think Cardano is winning anything in the Bitcoin area. Zero. Very, very negative on Cardano. I think Solana actually has users. The Phantom wallet is just an amazing wallet. Cardano, it's just starting out from nowhere. And this is not an academic, how many patents do you have? That's not what's going to determine who wins, who loses here. What's going to determine who wins or loses is how many users do you have? How much do people like the platform? How many people? And to me, Solana is a lot more than just, how many transactions per second, although that's impressive, right? But it's the Phantom Wallet, which is great. Now you got this seeker form. That's pretty amazing. Obviously, not super mass market, but you got Radium, you got Jupiter, you got this Zeus Bitcoin. You got a whole ecosystem here. So it's a network effect. I think Cardano has no network, so nobody's using it. Therefore, I think, if they had millions or tens of millions of users of Cardano daily, I'm interested. They don't, so I'm not interested. So I think that, I'm pretty opportunistic. I'm not just, I'm not just looking at tech and saying tech's bad or tech's good. I'm saying tech is not adopted. They are not getting adoption. I think Cardano is. And by the way, with respect to stablecoins, I will say this, because you have a lot of ETH people saying, well, ETH is the leader in stablecoins. Well, nominally, that's still true. However, if you look at USDT, the majority of USDT is on Tron right now, a horrible blockchain, but people are going to Tron because they don't like the user interface of Ethereum. And not just a majority of dollar value, but also a vast majority of transactions are happening on Tron, right? On USDT. And if you look at what's the fastest USDC platform, the fastest growing one is now Solana. So USDC on Solana grew 140% last year. That's a lot. So I think don't count Solana out as far as stablecoins. I know it's got a ways to go, but don't count it out. Talking my book a little bit, but I'm bullish on Solana. I think it's going to do well. And I got to tell you, it hasn't done bad. Where are we today on Solana? Let's see. Oh yeah, 204 or 205. I mean, the all-time high is 250, right? So I would say, Solana relative to its all-time high, a little less than ETH relative to its all-time high, but I think Solana will flip ETH. That's my gut feel, and I know that's sort of controversial, but that's what I think. I think Solana's going to flip ETH. So I hope you guys enjoyed it. I hope you guys download this app. It's a little, there's some refreshes. It's not an app. Just go to the site yet. The 1 million.quest. Just go there and do it. And I just have it bookmarked, so I can just click it and go there. And let me know if there's any other metrics that you want. I can add them pretty quickly. Or Ben can add them. And then we're going to have the app out at some point. So let us know about that. I don't want to clutter it too much because I already have so much data in it. But there may be some things that I forgot that we could add. So I'm open to it if you guys have any good things. And with that, I'm going to end the stream. Have a good